Hey traders, welcome back. Scott Stewart here once again with a little bit different take on our weekly trading preview for the week of July 25th, 2022. All right, so normally with the weekly trading preview, I map out my technical analyses for the week. I give you an overview of my view of support resistance areas for the week, starting our trading, and I map out our intended trades for the week, Monday through Friday. I'm not going to do that today because I think that all of that will change regardless of what I show you guys. Guys, we have one of the absolute busiest, maybe most unpredictable weeks ahead of us right now. This is a crazy, crazy week that we have in front of us here. Obviously, Wednesday is going to be a big day for us in the marketplace. We've got the FOMC minutes coming out. That always is a market mover, and it's going to create some opportunities and some challenges and risks. So we know Wednesday is going to be a big day. We also have earnings galore this week. 1/3 of all of the S&P 500 companies are going to be reporting earnings this week. And I think most importantly, it's the big ones that we're looking at. The Microsofts, the Apples, the Googles, the Amazons, the Metas. We saw several companies this past week, Snap being the big one that was in the news, but Verizon, there was quite a few that really just got taken out to the woodshed. And if that trend continues this week, who knows how that's going to affect trading, how that's going to create gaps, how that is going to affect the futures markets versus the cash markets. So we've got a lot of earnings coming out. We've got 50% of the NASDAQ companies reporting this week as well. On Tuesday, we have housing and consumer confidence numbers coming out. Those can move the market. On Thursday, we've got GDP numbers coming out. That's going to be a big catalyst or potential catalyst for the market. And then on Friday, we have personal income and spending coming out. So I think if anybody is right now today, I'm sitting here a couple hours before the market opens up on Monday morning, July the 25th. If anybody thinks that they are going to have a pretty good solid prediction for where we're going this week and how it's going to develop, I think they're kidding themselves. And so I'm not even going to try this week. What I'm going to say is, number one, from a trading perspective for us, we're going to stick to our knitting. So we're not going to get too crazy. We're not going to get too far out there on building a whole bunch of trades. We're going to stick with our zero DTEs, and we're going to try to trade as small as possible so that we can scale in those trades should we need to, okay? So that's just basically our straightforward trading plan for the week. It can be tremendously successful for us. I think it's interesting. I think it was Albert Einstein that said, in every crisis lies great opportunity. And there is, I think, undoubtedly going to be some tremendous opportunity this week if you can be a disciplined trader. So we're not going to throw a whole bunch of different trades on this week. We're going to stick to our knitting. We're going to focus on our zero DTEs. We're going to start very small. We're going to scale and allow us to be able to adjust should we need to. But that's our plan for the week. However, there are some things, a little bit of a data dump that I would like to share with you just in terms of thought process here, because we've had a couple of really good solid weeks. And a lot of the chatter lately has turned from just dire despair to hopeful optimism that maybe we're going to turn the corner here and get back to a bullish trend. So just a couple things that I'll share with you here that I thought were interesting. Number one, this is the S&P, this is the SPY. But one of the first things that I would say here is that, yeah, we've had some nice supportive moves, higher highs and higher lows, and we've been trending fairly well since the middle of June. But one thing I would say is if you are calling for a bottom in this market right now, my goodness, folks, at least have the discipline and patience to wait until after we have broken out of that downtrend. And that still remains to be seen whether or not that is going to happen. So keep that in mind. The other thing that I think is interesting here, if you take a look at this chart, I've removed the name of the chart. I've removed all of the numbers off of the chart. If you just look at the price action of this chart, I would ask you, where do you think this stock or whatever it is that we're looking at here, where do you think it's going? And if you were to say, well, there's a pretty nice solid upward channel here on this, I would say that, again, that's an important thing to note, because this is a chart of weekly candles on the S&P just turned upside down. This is just the S&P 500 weekly candles turned upside down. So if you really think that, if you believe in this move to the upside, what you're really believing is that the market has some continued downside in it. It is interesting how we can fool ourselves with our own emotions, our own cognitive biases, but this is the S&P on a weekly basis. These are weekly candles just turned up, inverted, just turned upside down. So again, it's always interesting how we can convince ourselves that the market is doing one thing versus another, but I would be cautious here. I would be cautious if you do think that the market is setting up for a rebound. There's 12 essential technical indicators that we put in as a composite every week and every day that we use to sort of give us a barometer of where we think the market is going, or what the flavor of the market is. And one of the ones that we use quite a bit that I personally put a lot of stock in is the Williams percentage range indicator. And you can see that is giving us a pretty good rejection here as well in terms of buy-sell signals, the Williams percentage. I like that as an indicator. I don't necessarily use it as a standalone indicator, but it is interesting what that is flashing and showing us right now. Something else that I thought was interesting as we closed out the trading week last Friday was this action in the SQs. Now the SQs, this is the ultra short, the ProShares ultra short Qs, and what's interesting to me here is the volume. Okay. $911 million flowing into this. So again, this is a ultra short. This makes money, only makes money if the market goes down. It's an inverse related item that is leveraged. Okay. This is almost a record. This is almost a record. This is not quite the number one day of inflows into this trading vehicle, but it's very close to a record. Lot of money flowing Friday into a lot of shorting positions. The other thing that is a little bit more long term, and it's not necessarily something that we use on a day trading basis, but it is interesting, and that's the ISM reading. So ISM and PMI are considered to be the top two most accurate indicators for where the economy is going. And ISM is potentially heading down to 35 here. And folks, I hate to be the bearer of bad news, but the ISM tells us that we are already in a recession. The ISM tells us that we are already in a recession. So Maybe we break out of this bearish trend. Maybe we even push a little bit higher than that. But I think to believe that everything substantively has just been changed and everything is hunky-dory now and the market should continue back to all-time highs can certainly happen. It may happen. I can't predict the future any better than anybody else can, but boy, the indicators here just imply that that may not be the case. The other thing that I'm looking at, I think, there's a lot of technical patterns that develop in the marketplace, and I think some are stronger than others. You have double tops and double bottoms, and you have V's for victory and M's for murders and cup and handles. There's all kinds of different patterns. But the head and shoulders pattern, I think, is one of the most accurate in terms of when you see it and when you get the actual result that it's implying. And so I'm very interested here. We're a long ways away right now. We're a long ways away from forming a head and shoulders pattern in the market right now. But I think that we might be headed there. Again, we might need another week or so of trading, week and a half of trading to fill this out. We could, again, clearly blow through these levels and push to higher highs. But I do see sort of a head and shoulders pattern forming in the marketplace. So it'll just kind of be interesting to see where that takes us and what it means for us. And then maybe last but not least, I will give you a little bit of technical analyses here. This is on the SPY, and you can see, if you want to pause the screen, you can see the different levels here that I'm looking at. We've got a trade in right now on our E-minis that we are trading, that we put in an overnight trade last night on, up here at this 400 level, essentially, obviously equivalent to the SPY. But what we've got going on here basically with the market is a very nice bull run here that we've started a couple of weeks ago. But it does, to me, look like we're in a nice rising wedge pattern here inside of a bigger bear flag with a whole lot of decreasing buying volume. So again, not necessarily what you would be looking for if you're hoping for a bull market turn. Now, again, all of this being said, I think with the earnings coming out this week that we have, with the Fed catalyst on Wednesday, with all of the other important economic news coming out throughout the week this week, I don't think it's even worth trying to predict where this market goes. So again, our goals for our trading room this week are going to be to stick to our knitting, not push a whole bunch of volume out there in terms of trades, and try to scale in very, very small on our zero DTEs each day, and try to be disciplined in our trading. But anyway, that's a little bit of a different overview, guys, for you than what we normally do. I do want to update you guys on our results because I haven't given you an update for a little bit. But this is where we're at so far based off of Friday's close. 89 days of zero DTEs, 139 total trades, 134 winners, 5 losers. Remember, you can always review each one of these days in the private link inside of our Discord chat room. We video and record each one of those. Our 4 DTE trades, 94 winners, 7 losers. Our IWM trades, we did get a double dip on that last week. So now, even with 28 total opportunities, we've had 30 trades. All 30 of them have been winners. This is a money maker right here for us, guys. It's been an awesome trade. We did get in 1 extra pairs trade last week, so we're up to 21 winners and 0 losers. No new bear market trades. It's been tough for us. You would think in this marketplace that finding trades that make money with something that goes down would be easy. It's actually harder because you don't have the things anymore that are tremendously overvalued and that you get in a frothy bull market. So it's actually counterintuitive, but it's kind of harder for us to find bear market trades right now. Our Tuesday, Thursday trades, ended up pretty well. We've had 21 total trades with those this year. We do trade the 0 DTE every single day of the week, but we trade it a little differently, or start it usually a little differently on Tuesday and Thursdays. Scale in very small, usually start with a butterfly. We've had 21 total trades. We've got 19 winners, 1 loser, and 1 that we rolled that ended up at a profit. So it's actually 20 winners and 1 loser. Need to update that. About 7% return for those last week. Scalping was a little bit of a mixed bag for me last week. $1,600 loss on Tuesday, $1,200 profit on Thursday. Dragonflies, no new trades there. We are initiating this new trade now, this positive Vega trade. Every 2 weeks we put one of these on. And so we've got 2 of those total right now up and running. We'll update the results of this. I would anticipate that this positive Vega credit spread strategy that we're using would approximate kind of what we're doing with the IWM in terms of success rate and in terms of rate of return performance potential. Shooting for right around 60% annualized return on these trades so far this year. I would think we would be fairly close on the positive Vega trades as well. And we should have maybe not quite as good a win ratio, but very close, very close. So we'll update those results on a monthly basis. Same thing with our SSO trades. So we buy this at the close, we sell it at the open, and so we'll have 20 of these trades every single month, and each month we'll update the results on those. Throwing about, I think it's about $2,300 every day in that for an overnight trade. The asymmetric trading system has been fantastic. There's not a whole lot else to say about that. In a market that is down, it's up and making money. What else do you want? It's just been awesome from a investing standpoint. That's not a trading account. That's an investing standpoint. So it's been good. So that's our quick overview, guys. If you do want to get access to our trading room, we do have a absolute free trial that you can jump in with a week and check us out, trade alongside of us, ask questions in the chat room if you like. If you sign up for a month and you want to give it a try, and you go through all of the steps that we ask you to go through, and you don't think it was just absolutely the most amazing thing ever, I mean, if you're not looking at it going, wow, these are trade ideas, strategies, setups that I've never seen before, I've never heard of before, this is awesome. If you don't feel that way, we'll give you double your money back. So I'll drop a link in the description box below if you want to get a free trial to the program. But that's our weekly preview, guys. I wish I could give you a definitive, this is the trade that we're going to be doing on Tuesday. This is the trade that we're going to be doing on Thursday. But I just think that it would be wasted energy with what we've got coming at us this week. So again, we will focus very tightly on our knitting. We will focus on our 0 DTEs this week. And we'll try to scale in very small at first so that we have the ability to adjust should we need to. But I think, again, as Albert Einstein says, there is, in every crisis, there is great opportunity. I'm almost guaranteeing us that there's going to be great opportunity this week. And so it really just falls upon our shoulders as to whether or not we can properly execute on it. So anyway, guys, appreciate you. I will see you in the trading room here shortly.